Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, January 27th. Action was choppy and trading volume was light this session, but stocks were able to close higher for the third straight session. Financial stocks, up 3.7%, finished as the best performing sector, with gains being shared by big and small players alike. American Express is one of the strongest performers in the sector, and the Dow for that matter. Though the company missed analysts' quarterly estimates and management expects write-offs to rise, investors were relieved the company didn't report any truly horrendous developments. Given the challenges facing financial companies and consumers, investors have become conditioned to expect lower earnings and higher accounting charges. Such was the case with Zions Bank, which reported a deeper-than-expected loss and increased reserves. Still, the stock logged its best single-session advance in 3 months and provided support to regional banks, which were up 3.6%. Wells Fargo contributed the most leadership to the financial sector, though. The diversified bank reports its latest quarterly results tomorrow. Wall Street expects earnings of 33 cents per share. Healthy gains were also had in the healthcare sector, which finished higher after Bristol-Myers Squibb and McKesson topped analysts' quarterly earnings estimates. Amgen, however, missed expectations. Semiconductors also had a solid session, thanks to leadership from Texas Instruments. Texas Instruments reported lower earnings, a reduced outlook, and plans to lay off 12% of its workforce, but the announcement were not altogether surprising, considering similar reports were already made by Intel and other industry players. Steel emerged as a strong performer after industry stalwarts U.S. Steel and Nucor posted better than expected results. Expectations were low in light of weak macro conditions. Steel stocks in the S&P 500 logged their best single-session advance in more than 1 month. However, AK Steel failed to participate in the bounce after it reported a deep loss. The overall strength in steel helped advance the materials sector, where Rohm and Haas was a relative leader. Rohm and Haas fell Monday after Dow Chemical reported it would not be closing its offer for Rohm and Haas by today. Buyout hopes remain alive, though, according to comments by Dow's chief executive in a CNBC interview. Meanwhile, industry peer DuPont posted a worse-than-expected loss for the latest quarter and lowered its outlook. Retail stocks were among the session's weakest performers. The group traded lower as investors reacted to reports suggesting the National Retail Federation expects retail sales to fall 0.5% from last year. Home improvement retailers, down 2.6%, were hit especially hard. Telecom stocks, down 3%, logged the worst performance of any sector in the S&P 500. Verizon was a laggard in its space and in the Dow, even though its earnings met expectations. AT&T traded lower in related weakness. The company is scheduled to announce its latest earnings results Wednesday morning. Although the stock market was able to extend its winning streak with this session's advance, the move seemed to lack conviction as less than 1.2 billion shares traded hands on the NYSE. More than 35 companies will announce quarterly results ahead of Wednesday's opening bell, but market participants were looking forward to the latest Federal Open Market Committee statement. Now that the Fed funds target range from 0 to 0.25%, investors will be looking for hints regarding the committee's methods of steering the economy without using rate cuts. The latest crude oil inventory data is also due tomorrow. Traders expect a build of inventory given persistently weak demand. Demand concerns seem to return to focus this session. After crude futures climbed more than 20% last week, traders pushed crude oil futures more than 9% lower in Tuesday's trading. Crude finished near $41.60 per barrel. I'm Pat O'Hare for Briefing.com. Thanks for listening.